Welcome, traders. Welcome to the Spacs Attack. Let's get this thing started. How we doing, traders? Welcome to the Spacs Attack. If you like my background, give me a big thumbs up because I got today Origen materials. I can't wait. Let me first bring on the brains to the show, my man, Chris Catchy.
Hey, what's going on, Mitch? How we doing today?
Hey, you got to smile, man. It's another beautiful day. You got the vaccine. I'm going to put it out there. So, hey.
Let's go. Let's go.
You know, with that being said, I can't wait till we get to actually meet each other. You know, Chris and I have been doing this show for about close to 5-6 months now. And really, we haven't even met in person. So I just can't wait. Give my brother a hug and let him know that we can't stop the Spacs Attack, baby. So give me a thumbs up, guys, if you guys enjoy the Spacs Attack, and hit the subscribe bell. Let's go ahead. I know that without further ado, guys, let's get into our headlines of the day so that we can get into our interview.
All right, guys. Yeah, we do have an exciting interview coming up today. Origen materials. But before we get to that, want to get through some headlines. And then we did have several deals announced this morning. So up first, I have MUDS, so MUDS, bringing Tops public. Seeing this one trade higher again today. It's been trading higher all week. Looks like this is a new pick from Whitney Tilson in a newsletter, calling it a stock poised for triple-digit upside. So keep an eye out on that one, starting to get a lot of attention out there as a trading card, NFT, and growth play ahead. We have APXT, which is bringing AvePoint public. We had TJ on the show not too long ago. So they reported first quarter earnings. So, their first quarter is typically the slowest quarter. They actually had significant growth, though. Subscription revenue up 49% year over year. And then the other exciting things were, their guidance. They're keeping that guidance in place. They actually think they could beat it. And then they also announced that they have authorized a buyback to purchase up to $20 million in shares of APXT. So that's not something you see, out there in SPACs a lot. They're actually buying up shares ahead of the merger. So to me, that's a huge bullish sign. We're going to try to get TJ back on the show. But guys, APXT, AvePoint, a Microsoft Cloud partner. If you haven't had a chance to look at this one, go back, watch that interview, and check this one out. What's up, Mitch?
Hey, I want to give a shout out right here to TJ. I know he's an avid fan of the show, hits me up on Twitter all the time, and I'm going to clip this out and give him a shout out, send this out to him because we will probably have him back on. We'll give you guys the details a little bit later.
Yeah, and also, Mitch, if you remember that show with TJ, that was the one where we had all kinds of technical difficulties. It was just one of those days, where nothing seemed to go right as far as, the video and the audio. And TJ was a trooper, right? He hung in, he did the full interview, and, we want to bring him back on because we want to have, a high quality interview, and we want him to talk about these new numbers, right? Very exciting time for AvePoint going forward. And then up next, we have SPCE, Virgin Galactic, which I do own shares in. So shares down today. Richard Branson, founder of the company, selling a portion of his position. I'm not sure what percent. I heard Spencer on the morning show today say 10%. Also, this was a scheduled sale. So it might be an overreaction by the market here. But now you have Richard Branson and Chamath both selling a portion of their stakes. Chamath sold out his personal stake. But I have to note, guys, keep in mind, pay attention to the headlines of the news. Chamath does still own shares of Virgin Galactic via Social Capital, which is his company, because of that Spac deal with IPOA. So Chamath is still, an investor in the company. He's also the chairman. So he has not, sold out all his equity in the company. And same with Richard Branson. He still owns a sizable stake. But as I said yesterday when we did our bull-bear debate, Virgin Galactic, they need some positive news. They need to get those spaceships up in the sky so they can start getting passengers and that revenue coming forward. Then QS, QuantumScape, so shares moved lower. There's a negative note out by Scorpion Capital calling it a pump and dump SPAC scam by Silicon Valley celebrities. So QuantumScape again was in our conversation yesterday. This is one where it did run up quite a bit in 2020. They're pre-revenue that you're a couple years out, so I think we could actually see more short reports come out, more people targeting the company, and the big thing is I don't think it's a pump and dump, but there's not revenue right now. So it's hard to really say, what's going to happen in the future and how disruptive that technology is until we actually get it and see it. So keep an eye out on QS. And then ARK Funds added more shares of DraftKings, Jaws Spitfire, and RTP merging with Joby Aviation. Those are three names she's been adding, a lot to recently. Especially RTP and that new ARK Space ETF. So keep an eye out on that one. And then I did see there's a SPAC out there, AACQ. So they are working on an extension vote, for that SPAC. So Julian Klimachko out with the tweet today saying that AACQ is going to deposit 6 cents per share into their trust each month. And the net asset value right now is $10.97. So if you're into SPAC arbitrage, like our friend Julian, this is one right here where, it may be a good place to park some cash. And our deal yesterday was BCTG. Shares were up 8% on that deal with Tango Therapeutics. And then turning to our deals, we had, one deal announced after hours last night. We had 2 deals announced this morning, including one that Benzinga actually got a embargoed exclusive article on, written by myself. So we had that out before it was officially announced. So if you are not following Benzinga or not a member of Benzinga Pro, make sure to check out the description below. Get that news out there early. So our deals today, we have CHFW, which is Consonance HFW. SPAC combining with Surrozen, which is a company pioneering a targeted therapeutics for tissue repair and regeneration. Again, biotech, not my strong suit when it comes to SPACs, but they're going to use those net proceeds to advance that pipeline through the phase 1B level. And then also I did see in the press release that they're looking to nominate the former chief medical officer of Pfizer to the board of directors. So that's something to keep in mind too, bringing in a big name like that. And again, these biotech SPAC deals sometimes, have room to run, and it is a smaller deal, so likely a smaller float. So keep an eye out on this one. Our deal announced last night was ROCC. This one's been rumored for a little while. So ROCC bringing Reservoir Holdings public, one of the largest independent music companies in the U.S., values the company at $788 million. So founded in 2007, it's grown through acquisitions. It now has over 130,000 copyrights under its music publishing business. A ton of #1 hits, including It's Your Thing, Ring of Fire by Johnny Cash, Take Me Home, Country Roads by John Denver, and Señorita by Shawn Mendes. They also have hits by Lady Gaga, Cardi B, and Bruno Mars in that catalog of songs. So huge library of content. Then they also have a creative business that represents over 60 clients, including Ben Harper, Offset, Takeoff, and 2 Chainz. And then over 26,000 sound recordings, which includes movie soundtracks like The Lion King, Pirates of the Caribbean, The Dark Knight, and Gladiator. They typically hold a top 10 market share position on Billboard's ranking of publishers. So they've spent over $400 million in acquisitions. They're going to continue to acquire companies, they said. And the growth of paid rights for streaming music and in-home fitness music, they list as possible growth areas for the company. They didn't mention NFTs in that press release, but guys, just have to throw it out there. Obviously, with the music side of things, these artists, these copyrighted songs, you have the potential down the road to, become an NFT play. Again, they have not said that, but that's definitely something to keep an eye out on for ROCC. And then we turn to our big deal. So again, announced this morning, we have DEH. This is D8 Holdings is the SPAC. They are merging with Vicarious Surgical. So Bill Gates, it was Vicarious Surgical. He is also backing the company via the PIPE. So this is a next generation robotics company. Bill Gates, Khosla Ventures, Becton Dickinson, ticker BDX, and Eric Schmidt, formerly of Google, his innovation endeavors, all investing in that PIPE. So some huge names here. Also, shares will trade as ticker RBOT on the New York Stock Exchange after the merger. So the company was founded in 2014 to develop disruptive technology with the goal of increasing efficiency of surgical procedures, improving patient and reducing health costs. So they say that legacy robotic platforms have limitations, higher cost of adoption, take up more space, and include expensive training. So this is a company, that can fix that solution. They have something, that fits through a standard door, so you can make it portable from room to room. They're also using a novel approach to surgery that uses a combination of proprietary human-like surgical robots and virtual reality that transports surgeons into the patient to perform those minimally invasive surgeries. So they see revenue hitting $355 million in fiscal 2025. They're lower cost than their competitors. So they think that cost-effective plan to improve patient outcomes, will make them a long-term winner. They're the only surgical robot company to receive breakthrough designation by the FDA, according to the company. Shares were up last night after hours on a rumor from Bloomberg that the deal was going to get through. And then again, we're up this morning, up about 2% right now. But yeah, that's what I've got for deals, Mitch. So 3 deals today. And again, Benzinga Pro, helped break that SPAC deal this morning, courtesy of Benzinga and SPAC's attack here. So don't miss out.
Yeah, definitely interesting day out there in the SPAC land. The QS news was definitely interesting. It was interesting because I had actually seen a triple D, that stock. I don't know if you know it, the 3D stock also. It was actually having a good day. And so I was looking at QS, interested in thinking that, hey, one of the things that I've been thinking about, right, is that, with inflation going so high, right, maybe that actually causes 3D to be a little bit even more attractive for, let's say, manufacturing and different goods, because it could come at a discount now because it's more of a technology that's already made there. The machine's already made. The materials could get a little bit more expensive. So I don't know too much of that side of 3D. So I got to take a look into that. But that's just what thought. What do you think about that, Chris?
Yeah, definitely. And I'll echo seeing SPAC Guru on Twitter too, that short report out from QS. I'm not familiar with that company that had that report out, and also the past couple companies that they have issued reports on saw drops, but have both since recovered and are almost double where those prices were when this company issued that short report. So again, guys, just because there's a short report out does not mean this is a scam company or that it's going to fall all the way to zero. Will we see shares fall, in the short term? Definitely. Investors are going to react to that piece, but make sure you know what you own. And if you own QuantumScape for the long haul, nothing has changed overnight, other than the short report coming out.
Yeah, we'll definitely keep an eye out on what goes on with QuantumScape. I've been really focused on it because it's one of my favorite. At least it's hit that support multiple times off of that 40. I want to bring up the chart here really quickly before we move on into our interview. As you guys see at the bottom here, up next, we'll be getting in with the Origen materials. But let me just take a look here at this chart. QuantumScape really getting that flushed down right quickly. But if we look at the daily, let's look at the daily, guys. We're getting it cheap now. We're getting it back to where it really did that explosion. So let's see if we can get some support right back up above 40. That's what I would like to see for this stock, QS. I would like to get it right back above 40 and then start seeing the strength as probably, you're seeing a lot of volume today. That could be people getting out, but that also could be people starting to get in at a discounted price. All right, Chris, let's go ahead and get into our favorite time of the day where we start unlocking the SPACs. So if you guys like to unlock SPACs, definitely hit the like button. And if you guys can do us a favor, hit the share button down below, hit your Twitter button. It'll give you a title and everything. All you got to do is hit tweet, come back to us, and check out the show. All right, let's go ahead and unlock some SPACs. All right, Chris, let's bring on our guests for today.
All right, guys, super excited. Again, another exclusive interview here on SPACs Attack. Joining us, we have John Bissell, the co-founder and co-CEO of Origen Materials, and Rich Riley, the co-CEO of Origen Materials. The company is going public with Artius acquisition. That's ticker AACQ. Welcome to the show, gentlemen.
Thanks for having us.
Well, it's a pleasure to have you guys here, and I'm going to go ahead and head out for a second, but I got you guys back here, so I won't forget you guys, and I'll let Chris do some questions, and I'll be back with some of my own.
All right, guys, let's dive in, and we'll try to get questions for both of you here. But again, feel free to jump in on any of these questions. So John, I've got you here in the middle of the screen, so I'll start with you. The big question, for our show, SPACs Attack, and our viewers is why a SPAC deal, to bring a company like Origen Materials public? And was there exploration, prior to that for a traditional IPO, and why a SPAC over that?
Yeah, I think the real answer for us for SPACs was the quantity of capital that you can get access to via the transaction. There's an element of speed and certainty to the transaction as well, which is certainly helpful. But I think the key for us was, with a typical IPO, you're just not seeing quite the same quantity of capital going into the business that you do with typical SPACs. And for us, since we're a capital intensive business, that's obviously really important, right? For us to be able to scale, we got to put steel in the ground, we got to make stuff, and that means we need capital to do it.
Awesome. Anything else to add on that, Rich, about the SPAC process and why using that to go public?
Yeah, we get feedback from a lot of investors that this is exactly the scenario SPACs were meant for. You've got a proven technology that we spent over 10 years developing and perfecting. We've got large customers with enormous demand and urgency to get our materials, and we just need the capital to build the plants and connect those dots. And the SPAC was the fastest, most certain route to achieve that.
Awesome. So, Rich, following up on that technology, can you walk us through, just kind of a brief explanation? What is Origen Materials all about, and how did it come to be?
Yeah, let me actually pass that to John if you don't mind, since he's our co-founder. And
that's perfect. Yeah.
Yeah, sure. So what we do is we take lignocellulosic stuff like woody biomass, and we convert that chemically into materials, broadly speaking. So we can make all sorts of different things. We're starting with PET. The PET that we make is it's drop-in. So it's exactly the same stuff as you see from fossil sources, just made in a different way, which means it's got a lower carbon footprint. We can make all sorts of other stuff beyond PET, but we're starting with PET.
Awesome. So then next question here is, I got to mention one of the things that stands out in this SPAC deal is some of the key investors. So we have Pepsi, Danone, and Nestle all investing in that pipe. They're going to own 11% of the new company. A couple of them also working, with Origen Materials. So I don't know which one of you wants to take a stab at this, but 3 great companies there. What does this mean for Origen? And what can we look to in the future with these companies?
Yeah, well, these 3 companies have been incredible partners of ours for several years. They've invested over $40 million in the company. They've worked with us. They've tested our technology extensively. They've really been partners all along the way to help us get to commercial scale, because they have publicly committed their intent to purchase low carbon and recycled materials instead of fossil-based materials. So they've been incredible partners. They're an incredibly strong base for us to build on. And you'll see us continue to add more big brands and big partners as we go along.
Awesome. Another thing that stood out to me in the investor presentation, again, I, as someone who covers SPACs, I read through lots of deals, and we see some of these companies that go public where, the shareholders of those SPACs are only getting, 5%, 6% of the company after the merger. With Origen Materials here, shareholders are, getting a sizable chunk. As far as the public shareholders are getting 39.3% of Origen Materials after this deal is done. John, you co-founded the company. Walk us through this. I think that's key here for shareholders to be getting a big chunk like that.
Yeah, I mean, that's just sort of the way the math works, right? If you're a capital intensive company and you need capital to scale, and that's that's how it lines out. But we really are. We're excited to be a public company, to have public shareholders. I think what we've seen so far is that the public shareholders are incredibly sophisticated, incredibly thoughtful, and so we're excited to be part of the public markets.
Awesome. So we got to talk about those plants that are coming up, those factories. So walk us through what these factories are going to look like. And looks like we will see the first one completed in 2022. How does a company like Origen Materials, get this deal done and stay on track to meet these, timelines put in place? Rich, maybe you on this one?
I'm actually going to let John do that one.
Okay, that's fine.
You keep touching my topics. So generally speaking, we've got a plant that we're building right now. It's under construction as we speak. Be done by the end of next year. It's coming online, around the same time. And then we have our another plant that we're starting out right now, and it'll be finished sort of halfway through 2025, give or take. That one's significantly larger. And what these plants look like is they're taking in a bunch of feedstock biomass. We think of feedstock, again, as I said, usually as sort of like wood chips or debris, wood waste, that kind of thing. But there's a wide range of things that you could use here. You can use mixed paper waste, stuff like roll office paper, packaging, cardboard, newsprint, that kind of thing. And it can be mixed. It doesn't have to be nicely segregated in terms of the lignocellulosic materials. You can use tops and limbs of trees. You can use even waste pulp sludge from mills and things like that for the production of packaging. So we can use all sorts of things. You've got all that material being handled on the front end of the mill, or of our plant, being taken in, processed chemically, and then out the other side comes actually some intermediates that go into the PET process. So these are big facilities. They're tens of acres, and they process a lot of material. But the key is the more material we process, the less carbon goes into the atmosphere. That's sort of the crux of it.
Awesome. So, I want to dive into some of the financials and the revenue. Is that a Rich question here?
Sure.
Okay. All right. So I want to make sure we try to split these questions up. So we see in the presentation, obviously a $1 trillion opportunity. But breaking it down, Origen Materials list a $1 billion amount for signed customer contracts, including those 3 large investors, and then also an additional $400 million in customer contracts under negotiations. Can you break down, that $1 billion figure for us? how does that kind of play out over the years? And then when will we get more news on that 400 million of possible additional contracts?
Sure. Well, what drives our business is helping companies meet their net zero goals. And you probably all see this just steady drumbeat of companies announcing these aggressive goals, 2050, 2040, 2030, some of them starting with 2050 and moving them in. And as those companies go on their net zero journey, they quickly realize that renewable power and transportation are only about half of their carbon footprint, and the other half comes from the products that are made. And so they have to figure out how to decarbonize that side of their business. And that's what leads them to us. And so there is $1 trillion of materials, as you mentioned, that's got to make this transition from fossil-based feedstocks to sustainable ones. And that's what drives demand for us. And so the order book and demand that you mentioned is customers entering into contracts with us. They tend to be 5 to 10 years in length, which signals these companies wanting us to be a meaningful part of their supply chain. This is not a test or an experiment. These are real long-term contracts. And all those customers would tell you they intend to buy far more materials than that. And in fact, we anticipate being supply constrained for the foreseeable future, because there literally is $1 trillion of materials needing to make this transition, and we're just getting started. We'll intend to update that demand picture for people on a quarterly basis as a key way to show our momentum with customers.
Awesome. So, John, one of the things we see with SPACs a lot is, a lot of companies that are pre-revenue going public. There's been some backlash now on, the companies that are going public via SPAC with these forward-looking, outlooks. So Origen Materials won't have revenue, it looks like, until fiscal 2023. How do you paint a picture here for potential shareholders of why they should be invested in Origen Materials for the long haul?
Oh, yeah. Well, so first of all, I think that it's a pretty clear picture as to why there's, you put capital investment in, you get revenue out the other side when you have large capital projects, right? I mean, you got to pay for all the steel and the construction and all the rest of it that goes together to put these things in. So I think it's a pretty simple story from that perspective. I think, Rich was just hitting on a bunch of the reasons why long-term Origen's the right bet. We're the ones making the first bet, right, as the people in Origen. And I think what has our team convinced is that the whole world's moving in this direction, right? Rich often calls it sort of a once in a planet transition that's occurring right now towards decarbonized materials and products and industry. And we have to figure out how to do that as a species. Origen's not the answer for every single part of that, but it's an answer for a whole bunch of it. And so we see that as a massive rising tide that we're going to be part of inextricably. A lot of these companies, the only way that they can hit their net zero targets is by working with us, right? We're a huge part of their supply chain, or we have to be a huge part of their supply chain if they're going to hit their net zero targets. So that's what gets us excited and, gets us driving at this every day.
Awesome. And then, so speaking of deals and that backlog, Rich, so I saw a deal announced earlier this month, for a company, looks like in apparel, footwear, and automotive. So obviously, those three key investors, Pepsi, Nestle, we're on the food side of things, the plastic bottle side of things. Walk us through, the potential here in apparel and footwear that maybe some viewers and investors, may not be considering for a company like this.
Yeah, when you look at the $1 trillion of TAM, packaging and food and beverage is definitely a large and meaningful part of it. But there's actually a larger part of the market. More PET goes into textiles and fibers and carpets and things like that than goes into packaging. And most people don't know that. So that market is absolutely addressable by us. We were excited to announce our first textiles partnership where we'll be going into apparel and footwear and all kinds of things, automotive applications, et cetera. We also announced a partnership to make low carbon asphalt. And, there's just such a huge addressable market that we can attack and decarbonize. And so we're just getting started and expect to see customers from a wide range of industries and applications from us.
Awesome. So I just have one more here, and then I'm going to turn over to Mitch, with some more questions. So, John, I'll ask you here. So, again, with everyone looking to turn to this industry, what kind of competition is out there? Do you have, direct competitors, other competition, and how can a company like Origen Materials really distance themselves from the competition?
Yeah, I think, look, these markets are so big, they almost defy belief. And we're going to be pushing into this market for a long time. We'll be a huge company as we get into this. I really think that the only credible competitor that we should be talking about or thinking about is the existing fossil materials industry. I think that that's what we're going after. We're not bumping around and hitting any of the other renewable materials companies. There's some interesting ones out there. Generally speaking, they're not really addressing the same products and same applications that we are, generally speaking. But even if they do, the market's enormous. This is a question about the us versus the status quo.
All right, I'm going to jump in here. And so I want to talk a little bit more about valuation. And so one of the things that I've been looking at is that the market is definitely focused more on SPACs, on focusing on references and how you guys can be kind of measured against different companies. So I have right here from your investors deck, kind of the illustrative. So one of the things is that I can clearly point out here, and I have it highlighted, wanted to focus in, was this 36%. Because if you look at all the other kind of focused areas, it definitely starts to that next level of revenue here with the EBITDA margin for the 2021. Can you explain a little bit more how you guys are that high focused on this growth outlook and how you guys compare in each of these industries?
Yeah, sure. So I think that the one way to think about the EBITDA margin here is we're standing up what's basically a new front end or upstream value chain for chemicals. Typically speaking, in our industry, what you see is a pre-segmented value chain where a lot of the margin has actually gone to the oil production assets. We're replacing obviously the oil in these materials. And so as a result, you're building out a whole new value chain from that point on. And let me tell you, if you're on the left side of the cost curve for oil production, your margin's a hell of a lot better than 36%, right? And so what you're seeing is the result of having a really low cost process that's supplanting the oil production part of the value chain in chemicals. And from that perspective, that's a pretty natural EBITDA margin compared to efficient and effective global oil producers.
Excellent, excellent. So the next question I'd get into here would be about kind of the world, like kind of your international stance. It's not just in the United States here that we're focused. And so I'll bring up here in the investor presentation, here we got, Ontario, Canada here. Tell us how you guys are working to expand outside of the United States.
Yeah, we think of North America really is sort of our home territory. We have this plant, we have other activities in Canada as well. And we really thought that the Sarnia site is just a great site, right? It's a chemicals hub in North America. It has history actually with the chemicals industry that's interesting and important. So I think that, in our perspective, the build, own, operate components of the business for the, let's call it the near to medium term, we expect to be mostly, let's say domestic, but really domestic to North America. I think that as we go beyond North America with assets, we'll probably do that significantly with partners. But from a customer perspective, and Rich may want to talk about this a little bit too, but from a customer perspective, we're already significantly international, right? Asian customers, European customers, both significant.
Yeah, excellent. Do you want to add something there, Rich?
Yeah, no, just to John's point, our customers are truly global, and the materials that they're purchasing from us are intended to serve global markets. And the reality is a lot of the countries in Europe and in Asia are pretty far ahead of the US in terms of their focus on decarbonization, already pricing carbon internally, governments with things like carbon taxes and other incentives and penalties for carbon usage. So we're absolutely serving a global market.
Yeah, definitely. That's one of the trends that I definitely saw started in 2020, and I think it's just going to kick off from here. So it's going to be something to definitely look out for. Now, of course, on more recent news is talks of inflation, right? How could inflation affect your guys' company here in Origen Materials?
Yeah, one of the neat things about our technology and business that we haven't really talked about is that due to our incredibly low cost feedstock of wood waste and our process, we're actually able to be price competitive with fossil based materials. So we have an incredibly advantageous cost structure and in a relatively fixed cost structure relative to other materials companies that are highly dependent on highly volatile oil and gas prices. So we're very well positioned to enter into long-term, relatively fixed price contracts with our customers and take a lot of that volatility out of their pricing.
Excellent. Anything you want to add on that, John?
No, I think Rich nailed it. I mean, I would, I think on the price side, right, you can look at how does inflation affect commodities, right, or materials more broadly. And I think that'll give sort of clues as to what the indications will be for Origen.
All right. So now, of course, one of the things that we like to do here on Spacs Attack is go to our chat. As you guys could probably see the comments side on our platform, we like to let you guys see that also so that you guys could see your kind of fans out there. And so we got some questions out there. First question we're going to get is from Brad here. And where do you guys get your raw materials from?
Yeah, so the really big answer is it depends a little bit. The specific answer is we usually think about forest products and forest residues. So depending on the specific site, that's going to be a combination of what they call tops, limbs, and slash from tree harvesting, pulpwood harvesting. It's going to be sawdust, pins and fines from other local mills. And then we do see there being some pulpwood that goes into it as well. So pulpwood sort of interesting as a grade of timber because it's distinct from structural lumber, so it's not related to the construction forest products feedstocks. But that's sort of what we think of as our base case. But as I said earlier, you can look at pretty much anything that has lignin and cellulose in it is something that we'd be interested in. The chemical process that we use can consume, from a technical perspective, can consume just about anything that's got those two things in there. As long as there aren't, car parts and engine blocks in the feedstock, we should be good.
And our favorite feedstock is actually used cardboard. So if we can figure out how to get enough of that to one spot, that'll be really exciting.
Don't worry, I got some in the backyard.
I was just gonna come right over, Rich. I'll start saving boxes for you, so we'll ship them out. So another question from the chat here. We have P. Mitzi asking about the timeline. So we touched on it a little bit. That first factory being completed 2022, revenue in 2023. Whichever one of you wants to jump in, maybe just kind of break down year by year those factories and maybe a little bit of revenue just to get a clearer picture of the timeline here.
Yeah, so as I mentioned, we have what we call Origen 1 plant coming online at the end of next year, which means it'll start to show revenue in 23 and that ramps into 24. We have Origen 2, which is a much larger facility, coming online in the middle of 25, showing a partial year of revenue in 25, and then continuing the full year of 26. So 26 is sort of an illustrative year in a lot of ways. You can look at 26 and get a pretty clear picture of Origen 2 online, full steam ahead, making PET, and you can pretty easily net out the impacts of Origen 1 and the overhead. And then in 2027. We have another large-scale Origen 2 scale plant coming online, and then it's a pretty quick pace after that. So as you get into sort of 27 out, we expect that there's going to be a significant number of plants coming online. We projected what we think the schedule for those plants are. But I think maybe the broader story is that Rich was talking earlier about how we really see this as a supply-constrained situation, not a demand-constrained one, not by a long shot, not by a couple orders of magnitude. And so I think the question is going to be, what are the ways and the opportunities that we see to accelerate that schedule, both in terms of timing of facilities and also in terms of number of facilities coming online at any given time. And we have our predictions about what that looks like, but I think if the world turns even more towards decarbonization, which it appears to be, I think there are going to be opportunities for us to go even faster.
All right. So next one from the chat right up here, we got Crew Cut with a nice one. I like this one. So what's the thought on carbon credits, and could this be used to create value here?
Yeah, we do see an opportunity for carbon credits. We haven't included significant quantities of revenue from that in our forecasts, but I think that's likely. I think it doesn't really matter what the form of carbon pricing is, whether it's credits or taxes, whatever else. That's going to have a pretty positive impact on us. We're looking at the revenue forecast that we've made are basically at fossil parity, effectively. Pricing. And so as you see fossil pricing increase due to things like carbon credits and carbon taxes, whether that's a 10 or 20 or 30% increase, you should see sort of ratable increases in, if not better, right, in our revenue forecasting and pricing.
Awesome. And then another question from the chat from Zoltan here. So talking about those deals announced in April. So I heard one of you mention the Asphalt deal, but I want to hear a little bit more about that. So why is that Asphalt deal beneficial for Origen going forward?
Yeah, Rich, do you want to take that one, or you want me to?
Yeah, I can take it. But we think of us as really a platform materials company that's making a wide range of carbon negative materials. And those materials can be used to make a very wide range of things. We talked about PET, but we also can make several of the components that go into asphalt. And so anytime you can use our components and materials instead of fossil, you're removing carbon, and then likely also getting some other functional benefits from our materials. So we're really excited to help take carbon out of the massive asphalt market.
All right, awesome. I think we're done with all our questions. I'm not seeing any more questions in the chat. I do see here one of our loyal fans, Sue, talking about the great questions, the great interview, and mentioning that she also bought AACQ. So guys, again, this is a company going public. You have the chance to buy the SPAC here. So AACQ is the ticker. So joining us on the show today, we have John Bissell, the co-founder and co-CEO of Origen Materials, and Rich Riley, the co-CEO of Origen Materials. Again, going public with RTS acquisition, AACQ. Guys, anything to add here before we let you go?
No, just really appreciate the chance to join your great show, and we couldn't be more excited about the opportunity, and really this SPAC market has really helped enable us to get our technology to market and help save the planet. So we're really excited and really appreciate your audience and your time.
Well, definitely stay on that mission, and we'll see you guys next time on the SPACs Attack, guys.
Yeah,
thank you guys for coming back on.
Thank you for your time today.
Thanks, guys.
All right, guys, as you guys see, we definitely try to get you guys the information. There you go. You guys have it there. I'm putting up the ticker up again, just in case you didn't get it. AACQ there. And as you guys see, these guys don't play over my shoulder. They're ready. They know what they're doing. And one of the things that I liked is how they got that cost advantage in the lumber, the timber. You got to keep your eye on these things. I wanted to ask about inflation, see if it affected, but it looks like they've been, keeping their eyes on it probably more than I have. So what do you think, Chris?
Yeah, definitely. This is a great company, I think, going forward. Again, you're a couple of years away from revenue, but this is a company, trying to do something positive, for the environment, help these companies with sustainability. I also saw an interesting note here in the chat. We bet Wall Street talking about looking at leaps. I had forgotten this company, AACQ, there's options available so for those of you who trade options, this could be a good one to look forward out, right? A couple years away with those options. So, Origen Materials, I really like the conversation we had. I like the big picture, and the thing that stuck out for me, right, was that they don't see any demand restraints, just possibly, the supply side of things and getting their factories up and running. But there's plenty of demand out there. I mean, and those three key investors, already with deals in place, I think they're going to be, able to kick in right away with that revenue from those factories. What do you think, Mitch?
One of the things I see here is that, this company is pretty cheap on evaluation standards. I mean, if you look right now, they're only trading at about 1.7, 3.4, the EBITDA, future EBITDA, it's not something crazy. And a lot of this in this industry where we're seeing right now where the SPACs are a little bit out of favor, but guess what? I think what's going on here is more of we're defining where we're going to focus on first. And I think we're focusing first on the value stocks inside of SPACs. So you got to focus on and see if there's value here and then determine that for yourself. But I think it's an interesting company, definitely on the valuations. You look at the financials, you could see here, definitely compared to a lot of the companies trading at, let's say, 21x or I mean, if you look to the right, Desktop Metals here trading at 41 times. I mean, it's going to be interesting because there's a couple companies that measure up to, you can say EMEA Scientific, they're in there. This is 46 times right now. So keep your eyes on these. And what do you think about that on the evaluation?
Yeah, and you said Danimer Scientific. So Danimer Scientific, DNMR, is a plastics, more of a plastics play, right? Sustainability, but that's now post SPAC merger trading at $33. So that one's gone up significantly from that $10 price point, and it's one of those companies, again, trying to do something positive for the world, right? So you as an investor can, take advantage by the revenue side of things, but you also have kind of this feel good, moment, right? You're actually investing in a company that's helping the environment, helping these companies be more sustainable. So to me, that's something maybe I want in my portfolio, right? And we look at the ESG side of things, right? We've got new ETFs coming out all the time where they're looking at companies, environment, sustainability. This is a company that plays into that well. So, I really like that. And that valuation, yeah, Mitch, I mean, it sticks out. And again, the SPAC's trading at what, like 10.08, I think last time I looked today. So you have very low risk going into the merger, and you're getting it at the same valuation as those pipe investors, right? So you're literally able to buy shares at the same price Pepsi and Nestle just paid to increase their position. So they were already investors before, and they probably got in cheaper than $10, right? But they re-upped. They bought in again at $10. So you can buy in the same price Pepsi and Nestle and Danone just paid. I mean, to me, that's a positive here. So this one has not run up recently, and I think here, this is a great level to get in at.
Yep, I'm going to go ahead and pull up the chart here, guys, so you guys can see the chart. We're right now at 10.08. It looking like one of the things I always point out is some levels, right? Because I like to point out levels, right, guys? So if I did a horizontal line here, all H for us Benzinga Pro users. You could draw right here, kind of this resistance that was here that we broke out of and got up there, follow it back. This is kind of the area where I would look, and guess what? Where is that spot? It's at $10, exactly at $10. So let's see if we can maybe get it right near 10. I like that. And then you can use this kind of low here, 972s. Like always, guys, do your own risk assessment. But for me, that doesn't seem like a bad trade off the 970s. If you get it close to 10, it's only about a 30-cent risk. And you can maybe look for a move right back up to 12, 12.50, 13. And that's a pretty good gain there. So I'm going to keep this one on radar, guys. AACQ, guys. All right, guys. So one thing I definitely wanted to touch today was a little bit of ticker time. We didn't get to too much yesterday. So let's go ahead up and hit some ticker time. Let us know what you guys want to see. So what's going on, guys? What do you guys want to see? What do you guys want us to touch? Let us know in the chat. We'll do something a little bit free. We're gonna stick to a lot of the specs, but if you drop one or two that's off of it, I won't be too mad today. We'll little free play today.
Just try to keep them biotech stocks out. I don't know if I want to touch. I don't know if I want to touch any biotech.
I mean, you could put it. I just probably wouldn't even look at it.
You won't get a very good opinion. I'll just say that. So.
All right. Of course. Up first, SNR telling me CCIV leaking a little bit. CCIV, did you leak under 20 yet? Nope. Almost there though.
Almost at 20. Almost at
20. Almost at 20 crack. I've been talking about this 20 crack for a while, right, Chris?
You have. I mean, that's
that price point that I want to see
falling.
It break first.
And yeah, I mean, I think if we see 20, that's another, mental level too, where I think maybe then people may start sending it higher, just seeing the $20 price point. It's a nice round number. And this one, again, being a popular one with retail traders and, people out there on social media. I think if we see 20, it could then run up because people will see that as a level, dollar wise, not chart wise.
Yeah, guys, I've been waiting for a breakthrough at 20. The next support is 17. I would love to get it somewhere in between there and risk off of that next level in the 17s. But I'm going to keep an eye on this one because I want to see a high volume spike when it cracks that 20. Because one thing I always talk about, right, guys, is the volume, right? You see how it's declining and declining? It's getting sleepy. We need it to wake up with volume. When you see those spikes, like we saw the other day, I think we let me go to a 5-minute chart. Maybe I can find the spike. There it is. Look at this spike. When you see spikes like this, right? Spikes like this that show up on the 5-minute and get you excited. You need to understand, guys, that you need to see volume, not only on this 5-minute chart, but go to the daily, find that volume and see if it really takes off there. Because if it doesn't take off there, then you're really not getting that sustained continuation move. Just to get you guys some insights there. Definitely shout out. Appreciate it. That's what we like to do, guys. We like to get you guys, even the specs that you might have not even been thinking of, but now you definitely know a lot more of. So appreciate the $10 tip.
Thank you.
We need it. We'll get a coffee. We'll wake up here.
We'll put it towards the airline tickets to meet up in Detroit, probably.
Yes. Wait till you guys see us side by side. That's going to be the special
we'll do it from the headquarters someday in Benzinga headquarters in Detroit. We'll do a show one of these days.
Interesting one being mentioned here by Solar after Coinbase coming, IPO in here. Let's look up NSTB here.
Yeah. So
what do you think about this one, Chris?
Apex Clearing, it's one of those names that's well known by, longer investors and institutions, but I don't know if as many people know, how big Apex Clearing really is and that they power, the behind the scenes trading of a lot of these trading and crypto platforms, with Robinhood being one. So I like them going forward. This is a company that's got real revenue, right? And growing revenue, as far as retail traders, brokers, commission-free trading, the growth of that. Apex is helping power that. They're the thing behind the thing, for retail trading. So I like it. And again, look at that chart. It's fallen here. We don't have a merger date yet, but this is one of those ones that maybe could run into the merger and get a lot of attention from institutional and start getting some price targets out there.
Yeah, guys, I'm going to keep an eye on this one. I drew it out kind of like how I see it right now, descending triangle here. Watch to see if the support kind of holds from that first kind of extension here. I would look to see if we can get back down towards 980. Right now, it doesn't seem the most interesting. It did get a little volume. That's kind of what we want to see, a little spike of volume there. So maybe if it can hold this wick down, which is 990, and then get back out of this triangle, then I'd be interested. But definitely, I'd wait a little bit. I need to see a little bit more volume, get back out of that descending triangle there. All right, let's keep going here. Next one up here. I'm going to go to, we haven't talked this one, I think, in a little bit, PSFE.
Yeah, so PaySafe. I think we mentioned it a little bit.
Oh yeah, we did.
Yesterday.
You got me. Don't worry. Look, yeah, I got the drawing still there. Look.
And look at that, Mitch. We're actually up today. A lot of these fintech names and the ones that maybe are sympathy place to Coinbase, we're actually down yesterday and, down today. So PaySafe actually trading up again. This is what I like, right? They power the financial backing of some of these gaming companies, some of these online platforms, your Roblox, your Fortnite. I don't know. I like it.
All right, guys. So I see in the chat SNR asking, where do you read the ticker on my chart? It's right here on the right-hand side where the pricing is. So I'll put it full screen so you can at least focus in a little bit. It's on that right-hand side. But yeah, you'll see the name at the top left also, just to give you guys some insight on that one. But yeah, you guys see my drawing here. Do not make this an NFT. I don't think anyone in the world would buy this, but we'll see if it follows it.
On that? What if I want to bid on that?
We'll see if it follows this little thing. I said, look for the rip up, the pullback day, let it come back, try to break that little line right here at 1350, and then come roaring back through the 14s. Let's see if that we get that to happen. All right, let's keep going here. Next up, we got Dean mentioned G-Box. G-Box?
I don't
even know what G-Box is.
I don't think it's a SPAC. I feel like, is this cannabis?
I just know it says green box.
Wait,
so it might be cannabis. You go in the overview, find out for me on Benzinga
green
Pro.
box
I'll look
POS,
at the chart. Oh,
blockchain.
This is a scary looking chart here, my friend. Happy. I did it for you because you're always a loyal viewer, and you can't get like that. We love having our loyal viewers here, but this one's a hard downturn, man. I say hold on to your pants to see if it holds 10, but I don't like this chart at all.
Yeah, this one I don't know the company very well at all, so I really couldn't comment. On the story.
Oh, it looks like it sells initiative. It's blockchain based payment solution. That's the cool part of Benzinga Pro, guys. You guys can just go to the overview, go to the bottom, get a nice little about what the company is in one spot where you can get everything. That's what I love. The details feature on Benzinga Pro. Let's keep it going here. And with that being said, might as well do the shameless plug here. You guys use that YouTube
20, guys. Don't miss out. 20% off. You hear us talk about Benzinga Pro, you see it mentioned, and as I said, guys, that Spac Deal DEH this morning, that we had that out before the press release. We also had an exclusive out this morning. This is not a SPAC, but GMBL Esports Entertainment. We had that out on Benzinga Pro, but before the news came out that PR shares are down now, but you did have a run up this morning on that news. You want Benzinga Pro. You're going to make some money because you're going to get this information as fast as we can get it. And you get those great tools, that great charting feature. You see Mitch use it all the time. So if you want Benzinga Pro, right there at the bottom. And again,
right, I saw
risk-free trial.
The crazy one that went ripping. I saw it mentioned by two people. Big Bill here talking about that it breaking 20. Let's go ahead and see it on the chart here. What's all going on with FUBU? To tell you the truth, I've been waiting for this one to get back down towards this 15 breakout. If you guys don't remember, I still, some people say it was someone else, but I still say I was the first one on this one when we came out of this rip here through the 11s. So one of the things that I said was this resistance definitely looked interesting here. So let's see if it comes back down closer towards this level here where we kind of went up, held sideways, and then broke out of it and then really started ripping. So that's kind of the levels where I'll be looking at it getting down towards is this 1597 and then down towards 15. Let's see if we can get a bounce somewhere there. And as it comes down, and it did a little fake out on that news about the soccer news. But let's see what happens there, guys. Another one to keep an eye out, just because it's about to be 12 and we got to get to the power hour. But we don't talk about IPOs anymore that often here, but we did talk about coin. So let's talk about this other one that I've been looking at is VZIO, guys. Keep this one it's on my radar, guys. I think this could be potentially the next Fubo move kind of. And I'm going to be looking also at Roku to kind of lead the way as a bigger name to lead the way. So if for Roku got people, I've been looking at this one bouncing off to 300. That's where I really got excited. I saw this quick turnaround and I said from 300, I think it could get to 500. I still feel that way. I would give that price target and I think it could get that high up there. Watch this one lead the way. I would love to see it rip through the 400s. This is just streaming. And with that being said, is there any kind of streaming play here in the SPAC land, Chris, that you know of?
We had the international one, the streaming play in, was it Indonesia? Is it MLAC? Malacca Straits, MLAC. Is a streaming play in Asia.
That's my boy.
Indonesia's
put it in the Chris OP to work.
Over the top. Yeah. So that's an international streaming play, which we're seeing, Disney and Netflix and Amazon all try to tackle some of those international markets. So, that might make it an acquisition target too. Mitch, we talked Fubo, which was an uplisting. I'll give you one more here is Enthusiast Gaming.
All right.
Currently trades OTC, so ENGMF. They announced today that they are uplisting. So they will be traded, I believe, on the NASDAQ. They own Luminosity Gaming, which is the world's most watched esports organization on Twitch for the entire month of March. So you're going to get a esports pure play company here when this uplists to the NASDAQ. I think when this one gets uplisted, you're going to get some retail interest, right? There's a lot of brokers out there that don't offer OTC trading. I think when you have Enthusiast, which owns Luminosity, hit a major exchange, this could be one to watch. So keep that one on your watch list, Mitch and viewers both.
I'll keep an eye on it. I see this straight uptrend on it, and that's what I like to see, guys. I like to see continuous uptrend. And look at this line I could draw. Look at this thing. This thing is uptrending, man. Look at that.
Yeah, and I think there was some rumors of an uplist for the past couple months. But
this
again,
is what I like to see.
That news officially out today, so it's going to happen. So I'm watching this one.
When you see those continuous uptrends, that shows that even times when the stock goes back and pulls back after the rip, it's being rebought up and it bounces off this uptrending trend line for multiple times here. So that's a nice one there, man. Looks like.
Go ahead.
You got another one?
Well, I was going to say that uplisting trend, I like that. So POW was another one, right? POWW that I talked about back in December, right? The ammo company. So I was mentioning that one at $3 when they had just uplisted. It's over $7 now. It did hit $9. Guys, these uplisting plays, they're interesting, right? Because, so throw out Robinhood as an example, right? You can't buy OTC stocks on Robinhood. Once these stocks hit a major exchange and they're in a trendy or a growth area, they're going to get interest. So that's where like Enthusiast Gaming to me, esports, when Fubo uplisted, right? I remember writing an IPO preview article and it was like Fubo uplisting. And I was like, what's Fubo? And I was like, oh, it's the streaming company. And it's like, okay, streaming, that's a growth area. And then Mitch talked about it on pre-market prep, right? And he said, hey, I like this one, right? And then it ran up. So look at some of those OTC plays too, outside of SPACs, but those uplisting ones, I definitely think is a positive catalyst.
All right. Looks like the Wall Street's bets is here. The We Bet The We Bet Wall Street.
We Bet Wall Street. That should be a site right there. We Bet Wall Street.
Oh, good Lord. You got it. I see you, man. Refined Warrior saying that she sees that beautiful uptrend. She can't blame you. She can't blame you, Chris. Shout out to Chris. But yeah, definitely, like you guys see here.
Chat, guys.
Hey,
thank you to the chat,
man.
Thank you to the chat today. And guys, we try to pull as many questions for those interviews from the chat. Some days we don't get a ton of questions. Today, there was a lot of questions out there, and we tried to get to a lot of them, so great questions, guys. We try to be as interactive as possible. So I know, guys, coming up on Power Hour, the thing I'm looking forward to is I told you about Esports Entertainment, ticker GMBL. They will actually be having an interview with that company today. That company had news out today that they're going to use idle gaming computers to mine Ethereum. I wrote that article, so I know the news, but, we're going to hear from the CEO, hear what that's all about and what it means for enthusiasts going forward.
Hey, guys, you guys heard it here, guys. Go check out Gamble's CEO on the Power Hour. Starting up now. They should have started up at 12:05. I gave him a little window to start up at 12:06. But like always, guys, definitely give us a like button. Give us a share. And this is what we're going to do, guys. We're going to rough through this little rough stage, and then we're going to go ahead and break out. I have that feeling. I'm going to stick around. I know Chris will be here giving us the information like always and using that brain, using that great hair, and we'll be right here, guys. I miss our mascot, Owens. I know the chat talks about them.
Yeah, the chat was pissed off the other day when they found out that there's not going to be cat, man? There's not going to be a cat in the video anymore.
Where's my cat, dude?
Sorry, guys. Yeah, roommate's gone. Roommate took the cat, so no more cat. But you do got this nice new blue background.
I see you, Blue. I see you, Blue. All right, baby. But
look at Happy saying 3 more likes. 3 more likes, guys.
3 more likes, fam. 3 more likes. Look.
Not even at 100. We gotta get to 100.
Like. He was telling you.
Yeah, there's the 3 likes. Let's get to 100, guys, and then go ahead and go over to Power Hour. Let's go.
Hey, guys. Let's turn this thing green. Let's turn this thing around. We'll see you next time, guys, on the Spacs Attack.